numbers this morning. Majid Al Futtaim releasing its figures for the first half of this year this morning. And in for the first peek, we are very happy to have them from the CEO himself, Ahmed Ismail. Ahmed, it's lovely to see you again. Thanks for joining us.
Likewise, Mandy.
And as these numbers have not yet been announced, I'm not going to steal your thunder. Do you want to run us through the absolute headline numbers for the group as a whole?
The year is off to a great start for Majid Al Futtaim. Revenues are up 5% despite currency devaluations in many of the markets where we operate. More importantly, our profitability, both in terms of EBITDA and net profit, is growing much faster than our revenues, in line with our commitment for sustainable and profitable long-term growth. So you would see that our EBITDA is up 13%. We've actually managed to improve our EBITDA margin a couple of percentage points in the first half of the year, and net profit has almost doubled versus a comparable period last year. And equally pleasing is that all of our businesses have really contributed to that positive story. In particular, the properties business that's posting another set of record numbers with almost 39% growth in revenues and 20% plus growth in EBITDA. So overall, a good set of results, and thanks to all the great efforts that everyone at Majid Al Futtaim.
Okay, let's dig into those. So that net profit up 70%, the top number there. When we see EBITDA and net profit increasing at a faster rate than revenues, which this is, we start wondering where you're saving the money. Where are you managing to cut costs?
Well, the reason that we're able to grow profitability ahead of revenues is multifold. I think one, we continue to allocate capital to the sectors that give us the highest return, and specifically within the properties portfolio, for instance, a good portion of our growth came from our residential business, where we've seen tremendous demand and some record-breaking sales. We've obviously continued to push on, financial discipline and operational excellence. All of that has paid dividend, and we've also benefited from a buoyant economy here in the UAE.
When we talk about your residential property, and we're talking about Tilal Al Ghaf there, how big could that residential property business get for you? How much of it, the Majid Al Futtaim pie, could it make up?
Well, Tilal Al Ghaf is already a significant project for us. It's a 19 billion dirham project, so it's quite sizable. And today, our residential business overall contributes almost 50% of our revenues within the properties segment. We're very excited that we've handed over our first 900, almost 1,000 units in Tilal Al Ghaf, and you see many happy residents moving into the communities. That's very gratifying. We will continue to develop that flagship development for us, and hopefully before the start of the new year, we'll be launching a second project here in Dubai for our residential business.
Will it be of the same scale?
Well, I can't comment on the details, but I can tell you, regardless of scale, it's going to offer the same signature experience of Tilal Al Ghaf and the same experience that Majid Al Futtaim is renowned for.
Okay, will it target the same high-end part of the market?
Well, Tilal Al Ghaf actually has quite a large target. If you look at the type of properties, the type of amenities that we have, really target, families across a wide spectrum of buyers.
Okay, so that's the residential property. Let's talk about your retail property. Property overall, as you say, seeing an increase of nearly 40% in revenue for the first half. Have you or are you increasing your retail rents?
Well, retail is doing exceedingly well across our business, and specifically in the UAE. Our footfall across centers is up 12%. Tenant sales continue to grow. Occupancy continues to grow, and with the success of our own tenants, that naturally flows into our rent revenue. So I would say that the success of our shopping malls is a reflection of the success of our tenants.
Are we seeing rents go up, though? We're hearing from a lot of retailers that they are being asked for more rents by their landlords. Are you one of them?
I think growth in rent always goes hand in hand with the buoyancy of the retail market and the underlying tenant sales. What we observe in our business is tenant sales are actually growing faster and ahead of rent growth. So our properties continue to be the most desirable and certainly the most profitable for many of the retailers.
Do I take that as a yes?
In a way.
You've got some great numbers when we do talk about the footfall, though, from Mall of the Emirates. Give them to me.
Well, Mall of the Emirates is a fantastic property. It's probably the most loved shopping destination in the UAE and one of the most admired real estate assets in the world. It's on track to achieve a record first half, or has achieved a record first half, both in terms of footfall and tenant sales, coming on the back of a very strong year last year with Expo and the rebound in retail. What's also very exciting about Mall of the Emirates is that we see our investments in sustainability paying off, and we do see sustainability as a trade-on for all of our businesses. So Mall of the Emirates continues to drive fantastic experiences for customers, fantastic returns, and has become the largest shopping mall in the world that is LEED Platinum certified. So it's also become one of the most sustainable retail destinations in the world.
Am I right in thinking that you've set a record for footfall in the first half?
We have set a record for footfall in the first half, yes.
What do you know about where those visitors are coming from? What insight do you have into the demographics of who's a visitor, who's living here, what it looks like?
Well, first of all, consumer confidence is up across the board, which means customers are coming back, spending more across all of our retail outlets. And of course, Mall of the Emirates being a flagship destination benefits from that. Population in Dubai is up, and we're seeing more and more people move to Dubai that are more affluent with higher propensity to spend. And there is a huge rebound in tourism. In fact, coming off a very strong year with Expo, we continue to see growth in the occupancy and average room rates of our hotels across the board in Dubai.
I was actually surprised looking at your numbers that hotel growth wasn't higher. You describe it as steady, it's fairly modest growth, a couple of percentage points. Why isn't there more?
Well, it's coming off a very high base last year. Last year, we had one of our best years ever with Expo, the rebound in tourism, the way Dubai managed the pandemic, managed to make it safe for everyone to come back. So actually seeing growth year on year off a very strong year is quite positive.
Okay, very quickly, only 2 minutes left with you, such a shame. If we have a look at what you're doing in the entertainment space, you've got Snow Abu Dhabi, you've opened that snow park in Oman. How much further can you take that concept?
Well, Snow is a fantastic family experience. Ski Dubai continues to go from strength to strength. We've opened Ski Egypt a few years ago, Snow Oman last year, and Snow Abu Dhabi in the capital is the first snow attraction for Majid Al Futtaim outside our own properties. So that's an attraction where we have strong intellectual property, and we think it has tremendous legs to grow in the region and beyond.
Have you got interest from outside the region?
We get interest all the time. I mean, anyone who comes and visits Ski Dubai can't help but think about, what would such an attraction look like in their home country or home city.
Your entertainment business revenue up 4%. You spoke about delays to the content pipeline. 30 seconds left with you. What are we talking about there?
We're talking about the cinema business. And obviously, it's pretty much dependent on content. When you have great content like Maverick or Jailer, the Tamil Bollywood movie, people come back to the silver screen in big numbers. So we're highly dependent on that. But we're very encouraged with the recent success of Oppenheimer, Barbie, and others. So I think an encouraging second half for cinemas is ahead of us.
All right. CEO of Majid Al Futtaim, Ahmed Ismail, in with their numbers this morning. Net profit up more than 70%. And those strong numbers coming out of the property sector as well. Thank you so much for your time. Coming up on the Business Breakfast, Ahmed speaking there about that growth in population in Dubai. We're going to get an idea of where some of it's coming from a business point of view next. Cameron Hutchinson heads up the recruitment company of Allsop and Allsop. Yes, they have one. He got in touch with us to say, I know where some of the business growth is coming from, guys, because we are seeing a spike in startups that need staff. That's next.
Dubai Eye 103.8.
Join the conversation.